Are we going too fast for you? Anyone? Are we going too fast? Oh, don't slow down. Okay, well, I'm going to pick up, and some of this Tom has already talked about. So, in terms of the acronyms, they're at 200.1. All the other definitions are at 200.1 of the uniform guidance. So we'll start with one of the definitions, and that is closeout. And anyone who receives an award should be getting closeout instructions. So the state gives you your closeout instructions. DOL gives them their closeout instructions. So I don't know which instructions you have issued to your subrecipients for closeout. So I'm not going to belabor that, but this is the definition of close. It's when you determine that all of the work has been accomplished and all actions have been completed. And you shouldn't be closing out stuff that still has legal liability. But what do you do with that? And that's something I'll talk with the state about tomorrow. So cybersecurity. Do all of you who receive funds, and you can ask yourself, you don't have to answer me, do you have a policy regarding cyber security? If you do not have a policy, there's a requirement that you do have a policy, a written policy that is distributed internally and externally. And so you can also pay for cyber insurance and get a separate rider for that. And look at your organization and determine whether you need cyber insurance. Has anyone ever been thinking about cyber insurance? All insurance is allowed to be a prepaid expense for the WIOA money, and any other Department of Labor funding. So you would need a blanket cyber insurance policy, not just for one section of your organization. And so insurance is prepaid and is amortized based upon usage. And if you get refunds for insurance, which many organizations that I've visited did get a refund, but the refunds aren't always making it back into the books. They need to make it back to the source that paid for those insurance costs. There's this new piece called provides protection for whistleblowers. Well, I don't know how good that gets anywhere, but technically you're not supposed to be taking any adverse actions against anyone for being a whistleblower. Tom also talked to you this morning about using the OIG hotline. So we didn't come just to talk about that. So this was added into the requirements. You need to follow the requirements for whistleblower. So those are the requirements. The United States Code trumps all of it. And I didn't mean to use that word, okay? 200.300, there are statutory and national policy requirements. You must manage and administer your federal award and ensure that all the funding is used for the purpose for which it was given to you. It even talks about the Constitution, following the Constitution. Well, that kind of be like the United States Code, huh? So, and any requirements in 200, the uniform guidance, you must follow those requirements. And any entity that gives you an award as a pass-through entity should be passing on all of the requirements that are required by the federal government on down to the lowest level of subrecipient activity. So I was in a conference in, let's say, Tennessee last week. I can't even remember, Myrtle Beach. And I started talking about passing the money down to the very lowest tier. Then it dawned on me, how far down are you passing this money before you get some action, before you're serving some participants? It's not supposed to just be taking administrative cut off the top. We know the state does that. Local areas can't run everything, but at some point you'd say, wait a minute, who should be running this? And how much money are we losing by just passing it down to? So you need to think about, and that's in the uniform guidance under the administrative cost definition. You need to relieve yourself of some of these administrative burdens. So all of the money that you get is subject to the federal statutes that prohibit, I don't know where this is going. We know where this is gone. There's a new sheriff in town. There's an executive, whatever you call them anymore. I don't know. They don't seem to match the terminology that we always had for that. But it's something to watch. You still have the requirement in your grant, and until someone takes that requirement out of your grant, what I have heard the administration say is you are to follow the requirements. So whatever the requirements are, until they change in your award, with regards to this prohibiting discrimination based on sex and blah, 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 you're required to do this until you get a written document that changes it. Your grant award is your primary source of what you should be following. Anything that and rules that are made on the floor today by whomever don't apply retroactively. So until all this money is gone that you do now have, you don't have any other requirements to follow with regard to this. And so you can't just go by what you hear on the news. Prohibited activities, Tom went through this, and I don't see any reason to go back through it. I do remember working with a state, a huge state in the country, and they said, well, we're not going to sign anything that says we're not going to lobby because we're going to use this money to lobby. I'm here to tell you, you shouldn't be using the money for lobbying. Am I coming back? I've been retired 15 years. I don't think I'll be looking, but someone might be looking. So you shouldn't be using the money for lobbying activities. Legal claims after the costs are disallowed. You can use the grant money as an administrative allowable cost as long as a grant officer hasn't given you a final determination on a federal grant officer, because you have appeal rights all the way up to the Secretary of Labor. Before that, it's an administrative law judge, and that process is laid out in the uniform guidance that you should follow when you do appeals. So first you would start with the state or your local level and try to resolve these issues. If you can't, you always have a recourse, and that's the Secretary of Labor. But look at the process. You need to follow the process that's outlined that DOL uses, and that's what you would bounce to, okay? So you shouldn't be giving any awards to debarred parties. I just want to make something clear here. I was at an organization in another state, and they called and asked, could they hire a person who used to run their fiscal shop who went to jail for some issues? Well, we have reentry programs. At which point have you paid your debt back? They're supposed to be given another chance, and it turns out the answer I got, did we debar the party or the entity? And so if the entity is debarred, it doesn't mean that the person who's, and I've gone on sites and seen them in position working a normal job, but you have to do your due diligence. What is the risk to you of allowing that in your organization, okay? But somebody who had a crime 10 years ago may be okay now, but you make sure they're not debarred. It's also saying that rental deposits and mortgage payments are prohibited activities. This is under the WIOA, so you can go back and look at that for yourself. So when I worked and monitored, I saw all kinds of deposits. They were sitting on the books as an asset. And is that how you still do your rental deposits? Make sure this doesn't cause you to do something differently. But mortgage payments, the only time you could pay a mortgage payment if it was somehow the mortgage was 30 years and the useful life of the building was only 30. I don't mean that which you'd already used before. I'm just saying it's the type of building. And everything is not a building. If you wheel it in here, it's a trailer, it stays equipment. So you're getting then authority to have a piece of equipment. You cement it down on the floor and all. You ask to have that equipment. And so when you get onto some of the rural areas, you might see that they may need to buy some equipment. And I've seen everything from movable, vans, all kinds of stuff is happening. You're over here on the island, you might not see all of it, but I'm just saying, if you need space, you might look at getting equipment instead of a building. And if the mortgage payment is paid by the state, you still can charge all the way back to the plans and drawing depreciation. So you collect it all. You never get depreciation on land because there's no way they could ever figure out the cost of land or the value of land goes up and down all the time. They've never had it as part of the depreciation method. But so you keep your mortgage payment over here and you got reasonable financing for it as long as what you're charging the grant. So maybe you pay some of it, but you're buying it and you're just depreciating the cost if it's a building. So you don't have to come ask for authority to depreciate equipment. If that's your method, you just get the equipment and use the depreciation method. You don't need anyone to tell you that. When you come to Department of Labor, you're asking for authority to outright purchase it. So you shouldn't sit around and no place to house your program thinking, well, I can't even use a trailer. A trailer is equipment. Replacing all the carpet in a huge area, that's equipment. Okay? And anything else you can break down in a building that you could, and rehab, if it's rehab for ADA, the chances are you're going to get approved full. Again, a lot of stuff has been delegated to the governor. Read that clause very carefully because it talks about those items under 407, 200.407, I think is the prior approval. Whatever that site is, I might have that wrong, but there's a prior approval, a group of costs, and I probably have it in my slides. But as long as you're doing depreciation methods, you don't need anyone to approve that for you. It still needs to be reasonable costs, okay? So the regs talk about selected items of cost. It can never talk about every possible type of cost that you might encounter. I was working on the island here with someone who had a fuel cell. You can look all day, you're not gonna find fuel cells in the cost percent. So it was approved by the grant officer as a reasonable cost. But when you don't have an idea whether or not it can be an allowable cost, it's best to run it to the top and make sure it's a gray area for you, you need to get approval. Even if you're doing this on behalf of the state. If it's a gray area, don't outright disallow it because that person who had that fuel cell, he had a great program. I think it was on the Big Island. He was a professor and he knew what he was talking about, but we'd never heard about it. So I don't try to insert myself and say, and you shouldn't either say, oh, this is just unallowable on his face because I never heard of it. It's a lot we have never heard of. There's a grant officer in Washington who will make that decision. If you can't get someone else to listen to you and you still think that you have an allowable cost, take it through the system. First, you would contact your federal project officer and the regional administrator, get them involved. They don't know what you're talking about, then you have every right to go to the national office and find out if you have an allowable cost. So the WIOA includes some prohibited costs and activities. Tom talked about that. We talked about construction. I just talked to you about construction. You can do some construction stuff with your own money, and you can depreciate it. Okay. But you cannot outright charge it to the grant. But you must comply with the terms and conditions of the award, no matter who gave it to you. If you disagree with something in the award, you can always try to get it resolved informally. And then if you can't get it resolved informally, there is a process you can go through formally with the Department of Labor after you've exhausted all these other remedies. And especially if you think some rule was misinterpreted, that they missed a step or something. I didn't get my appeal rights. They didn't notify me of my appeal rights. They just disallow it. No one should be starting with a disallowance unless it's a cost like alcohol or something. It's never going to be allowed, doesn't matter who you talk to. Your Christmas party is never going to be allowed no matter who you talk to. So, but if it makes sense to you, and I think I haven't allowed, you have every right to go through the process. But anyway, you're responsible for efficient and effective administration of the award through sound management practices. So what is sound to, and what is prudent? What cost would a prudent person incur? Jeffrey Dahmer was not a prudent person, but he was a person. So you have to think, what is customary for this type of cost? You know, should we be paying for graduation? Should we be paying for all these graduations? Should we be paying for all this food for you know, whatever it is, you need to look at the impact and what it has on the amount of funding you had to have a positive outcome for your grant. And when it gets to the point that you're funding things that will compromise that outcome, you need to pivot and figure out what you should be doing. If you come up with, for instance, those incentives, you need to have money to cover it. I don't think you have a money problem here in Hawaii, though, yet. So you can come up with some creative ways to do more for your participants. You're expected to pay market prices, and that's in the area that you operate in. So your market area is whatever you can get on Big Island, and those things that you can't get on Big Island, not Big Island, on the island that you're on, and those things that you have to pay shipping costs and all that, because that's part of the cost. When you start talking about the cost of, so you're talking about market prices for salaries. You know, what do we pay if a new position is created? What is customary and what is kind of similar to that? Who in the country is kind of like Hawaii that you could get some advice from, because they may already be doing something? Doesn't mean you do what they do, but at least you try to get a comparable price and make sure you're charging a reasonable amount. And whether the cost represents a deviation from your established written policies and procedures. You cannot have a written procedure that says, for instance, I will not give cash advances to my subrecipients. The only reason you can't give cash advances to your subrecipient is because you don't have a policy that you can document that is realistic based on their forecast of the cash needs they have when the money arrives at their organization. So I hear all this about all these payments are coming to the organizations late, they can't get the money in time. Are you using the forecasting mechanism? And you can use something as simple as a calendar. And you can say, my rent is due on this date, and you put all this in your explanation to the feds when you request the money. These subs need to pay their rent, they need to pay their payroll. We don't want people there's some other laws that you break when you don't pay people timely. It's not just these laws. All kinds of laws regarding paying people. So you should get and no one is expecting you to float these programs with your own money. That's why you were given an award. So you would have money to float the program. So the money should be at your door in time for you to pay, but you have a role in it too. Don't wait for them to question you. Do your due diligence. Do some forecasting. Work with your subs and get a forecasting tool, or work with the people in your entity who are responsible for ordering this cash and detail it and say when those payments are due. And then you won't be backtracking now trying to figure out, and the clock is still ticking and you haven't paid people. So it's allowable to do a forecasted mechanism. And what is the composition of costs that you can book? It is the sum of the allowable direct and allocable indirect costs minus any refunds, rebates, credits that you might have received. And one big area is insurance payments. Another thing I want to say about this too is when I used to monitor and when I've provided technical assistance now, I'm coming upon a lot of uncashed checks in the bank reconciliation. When you see that these checks haven't been accounted for in the bank reconciliation, because they should indicate each one of them in the bank reconciliation. And you should be getting, the state should be getting the Treasury statement. You keep a book balance, because all of these WIOA funds are not enough to be on the CMIA agreement. They don't meet the threshold requirement to be on the CMIA agreement. And so as the money trickles down, it even is less for them. So you should be keeping daily cash balances. And that should be the money you got in, the money you dispersed, and what do I have on hand, minus any rebates, refunds. CMIA is the Cash Management Improvement Act agreement that applies to states, and it's done by your Department, is it DAGS? Yeah, they sign that. But if you ever had a program that would exceed threshold, the threshold is different for any state. When they exceed, if you have a program that exceeds the threshold, you should be working with them to put your program on that agreement because it would simplify your life. But the WIOA has never been enough to cross the threshold in most states. So you can check it for yourself, and you go to Treasury to check that. Or you can call me even, macyprince@yahoo.com. But the composition is still minus any applicable credits, and so when these checks haven't made their way to whomever they were cut for, and they're stacking up in the closet someplace, that's a cash management violation as well. So once you issue a check, and if you don't get the Treasury statement, if you're a county government and you're not getting the Treasury statement, you're not going to get a bank statement because they don't issue you a bank statement. And many of them don't issue the Treasury statement. When I brought this up in training, most people don't even know what I'm talking about. It means that you need to go back and do some reconciliations, get that Treasury statement, and you should get it with the same frequency that they develop it, which is usually monthly. And Treasury, all treasuries across the country invest money overnight that is left into their account. A portion of that money comes back to the programs that you administer because it's attributed to whatever balance the float in the bank account. Not what I drew down, not what I paid out, what's the balance after everything has been cashed. So when they invest that money, they earn money on those funds, and a portion of it belongs to any money that was federal that was sitting in the bank. Sitting in the account that night. They used to use zero balance accounts. They would charge, and I don't know what you use now here. Are you still issuing checks? So you don't you don't have any electronic transfer to your subs. So anyway, you need a process for almost everything we talk about. So if you're doing cash, how do you get payments to your subrecipients, for instance? I know, but what do they do? You have a cash form? Cash request form? Okay. Well, anyway, just continue to look at whether or not these
What was the answer to that one?
allowable.
What was the answer? How did the subs get their money? Warrant, a check? You issue a warrant or a check warrant to them?
It's a check.
How long does it take for them to get it?
Let one of them answer. How long is it taking to get your money? I'll close my eyes. Well, I'm asking for subs to answer. Subs.
Subs, yeah. If you're a sub, how long does it take to get your money? When you make a request, how long before you get the check?
It's a safe place, though.
Yeah, we're
Come
just
on.
trying to address whatever we can.
How many? 4 weeks? Couple of weeks? Before your next draw? You draw every 2 weeks. If you're a sub, how often do you draw? Once a month? Once a month. So you
And
cover.
what are you drawing based on when you do draw?
Are you paying first and then getting reimbursement, or you no advancing?
Program pay first, and then they bill us. They send us an invoice, and then our WIOA accountant will make sure it all matches, and then send it to the state for reimbursement. And I think somebody, I'll work with Lisa Kobayashi. How long you guys take for check?
Yeah, but you're also saying that you're only
you're
getting
paying first.
paid for expenses.
So everything is
Expenditure.
reimbursement,
Not for bills not for the paychecks that need to be cashed.
no advances.
You're saying you need to pay those out before you get,
It can include accrued expenses. It can include estimated payroll.
okay, first of all, let's figure this out. Is there a separate cash request document from the reporting document? Is there a separate document?
There's a box that says cash in hand and the accrual, so that they have to report what's left over from their previous. And then
Okay, I'm just trying to figure out how do they report all the data elements that DOL require to you? What are they reporting? I'm not just talking about cash. there are other data elements.
There's the accruals. You know that form, that invoice form, that cash on hand?
They would have, so on their monthly request, they would have sections where they have their cash on hand, which is the actual expense. And then there's another part where they have, the estimate of the expenses for the new company.
That's their invoice you're talking about.
Yeah.
Okay, so we have other data elements like program income. Where do they report that?
Well, there's an expenditure summary, right?
Yeah.
There's room for that on the line.
So is it an expenditure summary so that I can say if I want to do I have these are federal expenditures and these are expenditures I have that I'm paying on behalf of the program? The recipient share piece, all this is on an invoice. It sounds to me, without going any farther, that you need to look at the forms that you have for cash requests versus the reported instructions you should have been issued for the various funding streams. And they are
There's two different.
two different.
Yeah.
But I think when we meet tomorrow morning, we'll look at that too, to see if that's something, because I think I'm hearing that the accruals are going on the bill, the monthly invoice. And Tom is up front because he hears something. Now, see, I didn't get up front when he was talking. Get to your chair. What is this?
Get dragged
Take
into
over.
this. No, I think we're confusing two things. There's reporting, you report expenditures, but when you're requesting cash, it's a request for cash. How much cash have I gotten so far? How much have I accrued in expense? What do I need? I need so much coming up within the next 2 weeks, 3 weeks, 1 month. And how much, if I had program income, I net that off my cash. So what's my net cash draw? I send that to you and say, okay, I need $50,000.22.
But I need to tell you what that's for now because
And that-
everyone needs to detail what that
Well,
is.
it's a summary unless you ask for backup, but it's a summary dollar amount. Like a general ledger detail or a summary by line item detail, okay. Right, so the line items, you'd say this is what it's based on, and then you crank out a check to them.
Okay, but I don't think we're saying the same thing. I think I hear an invoice is
It's not an
where you
invoice.
see all this stuff.
It's a reimbursement request.
Okay, well, what about all the other data elements? Where are they captured? On
Elementary.
the 9130, the state gets some
Well, that's not part
reporting
of your cash
data
request. They have she said, so they provide like a summary general ledger by category, line
elements. Well, as
item.
long as it has all the
And then
line
that-
items that the DOL
And
requires.
that's every 2 weeks or whatever, those probably eventually get rolled up into your financial report. All right?
Every 2 weeks?
But when they request cash, they don't request one cash a quarter, they request every month or 2
I'm not
weeks.
talking about just cash. I'm talking about separately having a form to request, to
Cash.
report to the Department of Labor that you use to report your subrecipients, that you roll up that information, and that information gets reported to the Department of Labor. Are all of the data elements that are on the 9130 that should be reported, are they all there? Okay. And then when I request cash, is that a separate form?
Yes, this stuff is attached to the expenditure letters.
It is attached, okay. Well, we'll look at it. So anyway, I'm also talking about, do you have subs below you?
I think it's confusing when you say requesting cash, like what kind of cash? Like staff salaries you're talking about?
To meet whatever requirements you have to meet.
Oh, yeah, because everything is reimbursed. Just trying to.
And that's what I'm saying. Something's,
So you pay first and ask for
right.
So it's straightforward, you got the numbers, you can fill out straight. A lot of places you can allow, I can request cash in advance of that, I don't have to. I don't have to pay first, I want my cash first. I'll give you a bill later to show you how I spent it, but I don't have to do it, I don't have to pay first. I'm a small nonprofit, I don't have the money to.
They're paying first. And that's what I'm hearing. They're paying first.
I just want to clarify, because in any new agreement,
Mhm.
the ability for the subs to ask for 2 months of advance, so that they have startup funds. So they don't need to wait till they run out to request. There's the ability to invoice the state every 2 months.
And get cash. I thought you said in the beginning they can get,
Yeah,
Beginning to get in advance, and then they.
okay, but they don't have to get in advance in the beginning to get cash. You shouldn't be using the working capital advance method in lieu of allowing them to request cash in
It's
time
just
to
when they
make-
start.
make
Then
their-
they burn it off and then they're into
Yeah,
a
but then
cycle.
you can't use that in lieu of a requirement to request cash along the way as I need it. It's in, well, everyone doesn't automatically get a working capital advance either.
Well, it's in the contract, anybody can get it. They have to ask for it, we just don't.
Tom,
Put it in the parking lot.
yeah, we'll park it, but still, he's in the center of the floor in front of the screen. That's my buddy, though. I've known him ever since he walked through the door. But anyway, whatever you're doing, it needs to be consistent with your policies and procedures that apply uniformly. And we will talk with the state about this issue that is going on with reporting and paying stuff ahead and giving everyone a working capital advance at the beginning of the contract, because that shouldn't be happening either. You don't understand what I said? Which one? But you give them 2 months in advance.
If they ask for it and increase the budget, it's not just giving it.
Oh, everyone doesn't get it in the beginning. Not you, Tom. When I get a new contract, do I get 2 months advance?
In there that would allow you to request it and receive.
But it says needed.
No.
You just get it.
You can ask for it.
Anyway, we'll look at it. We'll look at it. We can park it. I agree to park it.
Thank you.
I agree to park it. It may be fine. But anyway, the rules go on to talk about gap, and there are different gaps. There's a gap for nonprofit, there's a gap for government, and I'll leave it at that. The costs must not be costs that you use to meet a cash cost sharing requirement. So, and with regard to cost sharing, the uniform guidance says one thing, and 2900, 2 CFR 2900 says another thing. And it says when you spend match funds, the only time you can report the match cost is when you expend them. That's in 2900. It may be changed, but it's still there. Whatever cost you incur, it must be adequately documented. It gives you some sites. Administrative closeout costs may be incurred until the due date of the final report. This is in this section, but this is not allowed by 2900. 2900 says that you can only liquidate your obligations that were valid at the end of the program period. So it doesn't allow you to keep incurring obligations. You can liquidate the expenditures, the accrued expenditures that you report, or any errors, of course, that you found. But so this is what we were talking about earlier that is really hung up now until they do something else with uniform guidance, 2900 exceptions by the Department of Labor. You're not allowed to just keep incurring costs until you close out something. It has to be done during the period of performance. Reasonable costs, it's that cost when it does not exceed what a prudent person, and you have to put your thinking cap on, and if you think you need to get it approved, you need to get it approved. I think Tom has covered all this. Less than arm's length. Arm's length bargaining. You need to make sure that you are not a part of an entity that makes any determinations about an award. From the very beginning, that when it comes up, you need to remove yourself. Because your organization or anyone in your organization will benefit from that money, you need to step away and recuse yourself. It would be unreasonable for you to sit at that table. It would be unallowable if it's found out that you were at that table. So you market prices in your area. I don't know what you have to go off island to get, but it means in the area that you're operating in. You can read this. It's very worded. Let's look at the cash management, which I got ahead of myself. So the cash management requirements, dictate that you must be paid in advance unless you are sanctioned for some failure. And you cannot use the working capital advance in lieu of giving advance payments, because what happens with the working capital fund working capital advance, you work it off and you can't get another one until you get some new funding. But that is not, they want you to use a forecasting mechanism. And like I said, you can get a big calendar and lay out all of your, when do I pay payroll, you should be getting all that money at your door in time for you to meet your obligation, your requirements to pay your staff. You should not be paying staff out of your own money. You shouldn't have to pay your rent that is attributable to this program, these programs, out of your own money. And so don't confuse the cash report, the reporting format with the cash advances. They're two different things. And they each should have their separate tool or format and instructions. So let's take a quick look at equipment. What is equipment? And it talks about it has a useful life of more than 1 year and a per unit acquisition cost of greater now than 10,000. So someone gave the example yesterday when they were under the $5,000 threshold. Let's just assume you're under the $10,000 threshold and you get something that costs $9.99, a penny off. You also have to factor into that cost, the cost of delivery, shipping, and all of that. And so if you will exceed that threshold, you need prior approval. And so that's one of the issues. Equipment is one of the costs that's been delegated to the governor to decide whether it's allowable or unallowable. But the governor has to have a process in place. You need to know where you send this request for approval to. And so all of that has to be outlined. And when you get below and you have subs below you, you need a process for them to come through you so you can get this process, this request to the federal government if you need approval, or the governor if you need approval. And I don't know what funding sources you have, but for those cost items in the uniform guidance on the cost principle, those items only have been delegated to the governor. And then when you get to other programs like the Workforce Investment Act, for instance, there may be some other limitations. And in 2900, you might have some other limitations. I don't know what the new 2900 might look like, but the DOL exceptions were in the pipeline to be changed when the new administration took their seat, but they froze everything. So I don't know if the WIOA regulations will change before they change, who knows, 2900. We'll see what comes out of the new administration. But for right now, we have the definition we have. So it talks about capital assets, including computing devices and general purpose equipment, technology systems. And so all of that is equipment, and when it's a supply, it's under the $10,000. But another thing, so we say you can have 10,000. Your policy may be 250. Guess what? You have to follow your policy. You might start a dialogue about whether or not we need to, but I'm sure they're not going to just do it for the WIOA grants. But you can start a dialogue to see if you can get that threshold up, because it seems like we don't want professionals sitting around looking at $250 items all day to figure out if they're going to approve them. I mean, and making the salaries that they make. So I don't know who you would have looking at this and who would be qualified to look at that at the $250 level. But it's something to think about. So at 200, 405, subrecipients must be paid in advance, and I put it that must be because it must be. You cannot use these capital advances at the beginning of the grant just because they need some money. You need to pay them as they need the money to pay their bills. And no one should be stacking money to pay their employees, so you have to tell a lie to get the money. It shouldn't work like that either. And I'm not saying you did, but you need to have the money. So don't confuse these two. I looked at equipment already. Did I go backwards? $10,000. So the records for equipment, when equipment was $5,000, I'll stop there.
What is capital advance?
Capital advance.
Versus advance.
Did I say capital advance? Working capital advance. That's what Mary Carr is talking about.
What is that?
That's when you give them this money up front. So kind of like the startup. And you can do that, but that's not to be confused with, do I need an advance to meet my ongoing expenditures? But I mean, my ongoing bills. I need to pay my staff. I need to pay my rent. The way it sounds, and maybe I'm misunderstanding it, is they're fronting that money themselves. And then they get the refund. That's not the way it's supposed to be. But I know they're asking for more details, so I'm suggesting that you could put the more detail at your level in what you send to the state, so the state will have something to substantiate the request that they make on your behalf when they're looking at everything.
Well, what Maricar was said earlier is if they want an advance, they have to request it and provide some justification. They can't.
Well, I'm saying, we're saying the same thing, but what I also heard Mary Carr say is they could get 2 months up front if they wanted to.
In the beginning of a contract.
Right. And I'm,
But, okay,
so we're saying something different.
no, we're saying something different. So if I'm the accountant for John Doe,
Mhm.
if I'm an accountant for John Doe, and I know that salaries and fringe for my operation and rent equals 20,000 a month, that invoice should already be coming when I know my paychecks have to be paid on the first of the month. Does that make sense? So.
I guess
not
I'm having a
gonna wait.
problem with invoice here, because I'm thinking they're different documents. A cash request document shouldn't be confused with an invoice. And I think that's the part I'm seeing.
We only use one form.
That's the problem. And let's don't make it a problem now. We'll talk with you about it, okay?
That's been the
But that's my problem. Okay, okay. So you should have a separate cash request form. When you report to the Department of Labor, is that how you get your cash?
9130.
Is that how you get your cash? There you go. You have a separate document, right? You have a separate system. It's a separate issue. It's a separate issue. And that's what I'm trying to get you to see. If you were getting your cash based on your expenditure report every 45 days after the end of the whatever, you know, it wouldn't work out for you. And it's not working for them. They shouldn't have to use their own money.
The intent of that advance is you ask for it in June, July 1. You get 2 months worth of working capital up front. July closes, you're invoicing already for July. You should still have left over because you asked for 2 months. So you get 1 month of cash, plus then you're gonna get the reimbursement. So I guess I'm not understanding.
Do not confuse the reporting with the cash request. So just because I got an award doesn't mean I need money, doesn't mean I don't. But your request for cash is a separate document. It shouldn't be tied with your invoice. Okay. No, same. One document, she says.
No, the
We'll look at it.
I think we're mixing up apples and oranges, so, yeah.
DOL doesn't pay you based on how much money you spent. And that's what we're hearing is happening. And that's what I'm trying to talk about. I don't know what the root cause is. We'll look at it. Okay.
No, when you guys request cash, isn't it on the back?
So right now, Macy, is the counties sending the request for reimbursement. It's been like that ever since. And once it goes to the appropriate officer or program officer, review those reimbursement requests, they sign off on it, it goes to Fiscal or payments. And
But they've used their money then, and that's where I'm.
Yes, it's a,
When you request cash, when you guys draw down cash from
Yeah.
DOL, is it after the fact or you guys doing it in advance?
it's, once we get the
Not
support.
to reimburse them, for our cash,
Yeah.
to operate DLIR's cash.
Or you're talking about
That's what she's
internally,
asking.
or are you talking about the reimbursement to the counties, or you're talking about our?
When you draw down cash, right, DLIR.
I think Mary Carr understands it, and I think
So if
she
we're
understands it.
Yeah.
And I think we can figure it out and deal with it,
Yeah,
okay? And I think they hear something different that is what happens. What overwhelmingly I'm hearing is they're using their own money, and that's all they're allowed to do until you clear their invoice. That's what I'm hearing, and may get a working capital advance.
No one precludes them from requesting earlier and as often as they want. There's no.
But they would use an invoice to do that.
They would use, yes.
that
They
form.
submit it with the subrecipient request.
Yeah.
So.
Well, look, I'll look at it because I'm lost now.
Advance request.
Has anybody ever done that, ever?
Yes.
Honolulu's doing it.
Yeah.
Honolulu is getting money in advance?
Yes.
Okay. Okay. Well, I know they're looking so closely at every cash request now. So I'm hoping that you can build a system where you have those justifications that can go forward and speed up that cash that comes to you for your own organization and for your subs. And we can look at it. I mean, we can look at it, quickly look at it, okay? Just look at the forms, but I think I hear only one form and some cash advances. So at the end of a program, the aggregate fair market value of supplies, those things, supplies exceeding $10,000, they don't change the equipment, they still remain as supplies. But you can request disposition, and whenever you operate such a system, you can keep $1,000 of that for operating that system, okay? So supplies at the end of the award, if we don't want your pencils with your name on it, we don't want your stationery with your name on it, but those usable supplies, you're accountable for those. And under WIOA, what we typically see is the state just move that to the next year. And you have such a policy to move it to the next year. Yeah. Yeah, they can use them under the formula program. But the lower, when the money goes down farther, you have to look at what policies you have for that. And then $1,000 is allowed. It doesn't mean they'll have $1,000, but can you hear? Can we hear
Going
you?
to cover what happens if when WIOA shuts down entirely.
Who said they're going? We're not going there. We're not there yet. You're way ahead of us. We don't want to go down that road. Maybe shut down when we leave today. Who knows? That's a good one. No, we're not there yet.
Can we get severance pay?
Oh, okay.
Folks, hello. Okay, that's not the issue here. Also, there's so many unknown variables, so I don't want people's anxiety to go up because it's really not. No, there's not. NGA, National Governors Association, has been very much in touch with us, and that's not even an issue for now for the EDs. We just had a meeting, so please rest your anxiety for now until such time that we really need to worry. Okay, there's so many
I
unknown
haven't heard
variables.
anything about it going away. Okay, let's move on. I think we got this part. So the audit threat. Yeah, thank you very much. When is it gonna die? So the audit threshold has been increased to $1 million. And so if you have spent less than $1 million, you can't use that process. You can't use the single audit threshold process either. You can't pay for those audits. But program-specific audits threshold also was increased to $1 million. Okay, so if you want a program-specific audit of your sub, you have to pay for it. How do you get to this audit threshold? There are two types. There are two things that have to be reported. I know you report your expenditure. You look at your expenditures. What else do you look at? Anybody? Just a little short quiz. Anyone, what else do you count to meet that threshold? Program income, I'll answer it for you. So if you have program income, so let's say you spent about 500,000 less than this, and you have program income that puts you over the threshold, you have to still have a single audit. Okay? And I'm just using that as an example. It could be $3 that puts you over the threshold. It was just like the $1 you were denied. You couldn't count it. They made you come in for a prior approval. If you're $1 under $1 million, guess what? You can't charge the cost that you would charge for a single audit. You're not required to have a single audit. Okay? I'm not going to read all this to you. So this says it at the top of that slide. The basis for determining amounts expended includes program income and grant expenditures. So the program income that is generated by that particular funding, the federal funding stream is what we're looking at. It's the expenditure of federal funds, okay? Audit exemption. So this is talking about when you spend less than $1 million. And then also when you spend less, you can get a program specific if you need one. And of course, you got the entity that wants it has to pay for it. Closeout, we talked about that earlier. You're still restricted by the closeout requirements in 2900, 2 CFR 2900, that says that you can only liquidate obligations only liquidate expenditures. No new obligations can be incurred after the period of performance of the award. This just talks about you must close them out. At the, are you closing out your sub-recipients? Do you have a closeout process for your subs? And do you have a closeout process for your subs? You do? Okay. Well, you should have one. And you proceed with the closeout based on the information that you have available. But you have a period of time to collect that information, and so you should have what you need available to you. But you must liquidate all financial obligations incurred under the award no later than 120 days after the conclusion of the period of performance. And you must liquidate all financial obligations incurred under subaward now in the 90-day calendar period. Okay? So all your sub-recipients have 90 days. The state has 120 days. What did I just say? No, it's at 120. It's at 120 in the agreements and all. It's at 120. It's at 120. We'll get back to you on that, but it's at 120. It didn't used to be at 120. When the uniform guidance first got changed, it wasn't at 120. So it's 120, Tom. It's 120. It's 120. 120 days after the end of the period. That's what it is now for the recipients, and 90 days for the sub-recipients. So again, you must account for all property, and you do that with the state or transfer it in accordance with what the state says. And you must make every effort to complete all the closeout actions no later than 1 year after the end of the period of performance. If the indirect cost rate has not been finalized, it doesn't mean you, I'm hearing different things from people who work in the Department of Labor or who have worked with the Department of Labor. So usually the Department of Labor closed your grant out whether or not you had your final rate agreement, because all indirect costs is based on a budget. Then you get the actual cost after you live that year and know it. And so Sometimes you don't know it until your auditor is done with you. They used to go back and let you bill for additional amounts. Now, if it sounds to me that some are saying that if you get a final indirect cost rate that is higher, but you still had money in the award and you turned it in and you did that report, what I think I'm hearing is you can't even get an adjustment to get paid that money. So we know that audits sometimes find errors. You sometimes find errors when you're truing up the books. So what I think I heard said is that once they lock that report now, things are being done differently, that you cannot ask to have that report reopened. When I worked, and you have to realize when I worked 15 years ago for the feds. I've been working on stuff that they fund, but it was 15. When I worked and I knew I had legal cases where we're in dispute about what is owed, and it might be something that the feds would lose or they would win. Well, it sounds like if you win and you had that money in your, we didn't take it away. We didn't close it out. But since then, there's a new law about closing out these awards in 1 year. So what do you do when you have question costs that is unsettled? Do you close out the grants? Anybody, because you know there's always some cost that is questioned by somebody, and they may win. Even sometimes when the feds are absolutely right, they can miss the deadline and still lose. You have to close it. So what do you do for your final indirect cost rates that don't come in maybe until 6 months later, more than 45 days? I don't know, something to think about.
So, basically, from time to time, you should have like the provisionary approved indirect rate. That's what we've seen before.
Probationary approved.
Provisional, sorry.
Provisional. Okay, still, any rate that is not final. All of these provisionals are based on budget, historical costs. When they're finalized, you might be owed more money. Say you didn't spend all your money. Well, if you have the money still here, you can make that adjustment in the state for your subs or whatever, if the money is still here, because it's 3 years, right? But if the money is gone, and even if the money is gone, if you deal indirectly with the federal government, you're not going to get it. If the rate is higher than it was when you closed out the grant, I can almost assure you that you might not get it. So as soon as you're really running the actual numbers before you have to even report to the Department of Labor. I would suggest that you handle all of these indirect cost issues as quickly as you can. Because when the money is gone, moved around in the national office or moved around at the state, you're left holding the bag. And you never were intended to get more than you were awarded. But I'm talking about those cases where you had money left over and I got a final rate. So it's just something for you to think about and to work with the state on. She was asking.
Okay, so my grant ends 9/30 of this year. I have to close out my grant, store my cases. I have to accrue the vacation sick leave of the staff.
Because that's your policy.
Now I have 120 days to close out. So I'm prepaying the salary, the salary and fringe for the accountant to close 120 days.
No, we're not talking
So
about prepaid.
now, right,
Can't prepay.
because no expenses can occur beyond 9:30. So I'm technically donating my time for 120 days to close out this grant
Are you capturing it?
Yes.
Okay. You-
and to carry all my stuff in storage.
Actually, you have ongoing money, though. You have 3 years of money.
Didn't have it?
So it gets dicey.
Yeah,
It gets dicey. And because your subs are here, I mean, don't go that far yet, but the prepaid.
no, 'cause we
some
do-
things you're
we-
allowed to prepay.
We have grants that end, so,
Good
like
conversation.
the quest, right? Where it ends 9:30,
That's DOL?
yes.
It ends DOL, and so what they used to tell us is, ooh, that's the cost of doing business with the federal government.
Domain-
But the new rule does talk about it being allowable, but until they change 2900, it's the cost of doing business. Tom?
Uniform guidance is now going to allow closeout costs, but it hasn't been adopted yet by DOL in 2900. So when they change that, you'll be able to charge closeout
But
costs.
you can't go retro
You can't, yeah, so right now, it's just the way it is.
unless they go retro. We got a question. There are
So
3
when-
mics. I think we'll put one on this side and one on that side and give Tom one.
So when you talk, oh, you have one, that's why.
Give me one of those mics. in case the
Prepay,
question-
when you talked about prepaying then, Tom, you were talking about the uniform guidelines and not the 2,900.
Yeah, the new uniform guidance that came out in October says they're going to allow, one of the allowable prepayments is going to be closeout costs, you know, your time and whatever to close out. But 2,900 has to adopt that. We have to adopt that and include, we have a closeout clause in 2,900, so we got to say, yeah, we're going to let you prepay for that also. Right now, it's just audit and storage. So hopefully they're going to do that soon, and that will allow you then to charge those extra costs or accrue them.
And they may never do it. They may take away all of this and say, well, this shouldn't have been in there. We don't know until it
And
happens.
so right now, the closeout thing here is the prepayment is for just a period of liquidating everything? Is it just for the 120 days?
120 days after the funding period, no new obligations. This would allow you to do some, let's don't get ahead of the ball. It's in the closeout requirements under the uniform. When the new administration came in, everything that was in the pipeline to happen, like 2,900 revision and any other guidance it was frozen.
Okay.
Until it thaws out, guess what? You have what
So
we have.
when it thaws out, then if and when it thaws out, then we can have closeout prepayment for a year.
Just read what it says. That's
No
all it
later
is.
than 1 year after the end of period
It's
of
whatever it
performance.
says. You have that long to complete it. It didn't say, you just have to read it and read it again because it's not even available to you yet. We're just pointing it out because it's in the new uniform guidance and may be available to you. But it's simply what it says. If they add anything to the uniform guidance, the DOL exceptions at 2,900, it'll be whatever that is. Okay,
The year is for the federal agency,
right.
not for you guys. Okay? The federal agency must make we got to close out everything within 1 year. Okay, it's not you. You get your 120 days. We get 100. We get a year to close out these.
And your subs only get 90 days. Okay, and the idea behind, if you made it tighter, whatever it is, tighter. 2 mics now over here. No mic left over that side. Movable mics. Who has the question? You.
So it says if the indirect cost rate has not been finalized and would delay closeout, the federal agency is authorized to mutually agree with the recipient to close an award using the current or most recently negotiated rate. It takes a long time for us to get a response from the feds. It takes months. I just followed up with FAM, I guess that's his name, and FAM, or anyway.
Where is that, regional office?
Yeah, so,
Is that 2?
No, this is the guy that reviews the indirect.
anyway, it's taking long, and he acknowledged that he's
DHS.
overwhelmed. It's gonna take months. But in the meantime, where it says the federal agency is authorized to mutually agree, like, do I contact him to like mutually agree, or is he going to?
What are you going to have them mutually agree on?
Using the current or most recently negotiated rate.
I think what you would try to get him to understand and communicate about is, can you get this finalized?
I reached out, but he said.
So you're talking about the national office,
No, it's the regional guy. I think he's in California.
DHHS,
It takes 6 months. It's long.
state indirect cost rate.
Yes.
The state's indirect cost
No,
rate.
no, 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 no. The Fed's working on approving or reviewing the state's indirect cost.
See, I thought all DHHS did all indirect cost.
Campbell, they're behind getting indirect cost rates out. They're way behind. So she's saying, we're waiting. We got to close out. We don't have our
I
updated
think
rate.
as soon as you know your actual cost, as long as it was lower than, I think you can go with that. The problem occurs if it's higher than, and getting someone to listen to you and saying, look, these are my actual costs. I use the same methods of administration I used before. I've always used them. I think you have a cost, then you could put on your cost reports. But you're not supposed to change that indirect line unless you have an approved indirect cost rate. But you can reach out to someone through the regional office and have them take that all the way to the national office. I would hold those contracts open until all disputes were resolved, including, but they always close out indirect costs. I'm talking about if it's higher and you have that authority. I'd gamble first on the side of I'm getting my money. Because if you lose the money and you turn it, you had a cost. It's a valid cost. You've done your books of account. You know this is the actual cost now. You got to get someone to listen to you. And maybe you use the regional office to intervene on your behalf with the, I guess it's DHHS. That's who does the state indirect cost rates. I have heard, and I shouldn't probably make this public because I sent out a message about it, I've heard they're 2 years behind. I don't know how far behind they are. And a lot of this is attributable to a whole lot of stuff. The pandemic happened, and then we got a lot of hiccups going on. People have left. So I think, and I protect myself, and you wouldn't get my money back for actual cost. And I don't have any money to pay if you do get a disallowed cost for that. I don't think you will, though. It sounds like an administrative issue. It's an administrative issue. You're not penalized. All of these costs that get written up in a question in an audit, the final resolution for costs resides with the National Office Grant Officer. I don't care who writes it up. And that's who you're going to close out with. As long as you can defend yourself and say, look, I knew they are behind, have all that documentation about how I was trying to get this finalized. I had the same methods of administration I used, and this is the result. But for this log jam, it would have been approved. You see what I'm saying? But you're out there on skates anytime you incur costs that hasn't been approved. But in a normal environment, they would be approved. But if it's more than your grant award, it's never going to be approved. Does that make sense? And I think you can operate that same kind of system with your subrecipients. Make them prove to you, these are my actual. Now, if you come up with different methodologies than were approved for you, you got another problem. And they can jam you on that problem. And so you know what the methods of administration that you've used all the time. Don't go changing them. Tom says my time is up. I'm running out of time. How many more slides? A lot of this we've talked about, the reporting. I'm going to work. I'm going to meet with them, and we're going to talk a little about this. But your subrecipients have to issue shorter due dates to their subrecipients to get the reporting data up to the state in time for them to meet the DOL requirements. So if the DOL requirements for receiving the reports for that quarter is that they would be due on a Sunday, because that's happens to be the date that it falls on, is the date that is in the reporting instructions. You are supposed to get them there that Friday, not that Monday. And late reporting can affect your funding. So you have to roll up the feeder reports, and it doesn't seem, I don't know what we're rolling up. I don't know if we're rolling up I don't know what we're rolling up. I don't know whether obligations are right. I don't know what they're doing. I don't know if you're even looking at obligations. But it's something that we know came out, and we'll talk about it. So the due dates are there. So let's say May 15th, this next year, falls on a Sunday. You should have had your reports there that Friday, the 13th, okay? And the reason I kind of know that might be a real date is because our conference starts, that's the last day of our conference. So maybe it's not, it's a Friday. But anyway, you understand what I'm saying about that. You get them earlier, not later than the due date. These required certifications are in the uniform guidance, and that IENTS needs to be moved up to get married with the subrecipient. It should be subrecipient. But this is straight out of the uniform guidance, and if you don't have these certifications, you need to put them in place. Every cost that you are paying needs someone to approve it, and you need to figure out who that is in your organization and assign that responsibility. I'm out of time. That's it? I got more slides? I'm out of slides. You told me I had to hurry up. Well, we can talk about whatever you want to talk about for 10 minutes, or we can take a break. Which do you prefer? Break. Okay, break. They said break. Thank you for your attention.